WrestleMania 3 at the Silverdome in Pontiac, Michigan. It's a day that I'm certain my guest at this time will not forget. I'm talking about the former Intercontinental Champion of the world, Macho Man Randy.
Nothing means nothing.
Nothing
means nothing.
Nothing means nothing. What do you mean by that?
I'm talking about all the way to the top, yeah. Unjustifiably in a position that I'd rather not be in, but the cream will rise to the top. Oh, yeah. Macho Madness, yeah, has got more to offer than President Jack Tunney thinks that I got. Yeah, and I'm going to tell you something right now. Cards stacked against the Macho Man Randy Savage in WrestleMania 3. Yeah, let me say it, yeah. Let me say it out loud. And let me point to the president of the World Wrestling Federation. The Macho Man Randy Savage is not happy with your decision, yeah. I am the cream in the World Wrestling Federation.
Wait a minute, friend.
Welcome back, Rico Moneybags, the channel helping you invest in yourself so we can invest in the future. Make sure you guys smash the like button, subscribe to the channel, and make sure that bell notification stays on. And make sure you guys are smashing that like. I mean, like, if you're the cream of the crop, like Macho Man said right now, definitely smash the like button. But we talk about investing in yourself, and today's going to be one of those days, man. I got a legend up here. We're going to bring him up in just a bit after we get the likes up, we get the stream up. Man, we're already at 29 people, so it's definitely going to be one of those streams. But these are the ones that I really want you guys to lock in. I want you guys to bust out the notepad. I know we're pumping and the markets get good and it's all exciting and we get in that euphoric moment, but we got to dial things in. And, you know, these Wing It Wednesdays, I think Blunt has called it. This is where we're going to wing it together. We're going to talk about some fun ISOs today. So I don't want you guys to miss out. I see the XRP family already pulling up. I need you guys to go get the XRP community because that's one of the first ones that we're going to bring up is XRP. You guys have been killing it on the shorts. You guys have been killing it on my TikTok. You guys are, I mean, I was just talking to Blunt on my analytics on YouTube. The XRP family is definitely pulling up. So today's going to be a very ISO, you know, kind of stream, but we're going to start off with BTC because like you guys know, I call it the Mona Lisa. That is the rising tide that raises all the ships. And you guys know when it pulls back, it brings a little bit of fear into the market. But this is the perfect time, you know, to really be looking at possibly taking the short, possibly taking the long. It's at the bottom. That's what we're going to figure out today. But let's start off with BTC right away. We've been talking about BTC for a while. I mean, like almost every single day of our life. And this is what actually, this is XRP, but we're going to go to BTC first. My fam, pull up really strong right now. If you can, I see Saphir, Gorilla XPX. Share this in the main TG. Share this everywhere. We're about to have a legend up here as well. Like I said, Blunt's about to pull up. He's warming up. He's getting his shoulders ready. And then we're going to have some fun together on the stream. But right here, man, this is what we've been talking about nonstop. And we've been talking about these gaps. And it's never to FUD anybody's bag. You guys know that we love the market. We want you guys to print. It's just to hold ourselves accountable when the market's going up. Cool. We understand the market's going up. When the market's going down, can we handle that? Yeah, we can handle that. Okay, where is it going is the main thing. And look, we've been talking about this for a while. Look at this same little support area right here, but now we have a sell signal and we have to be responsible enough to say, hey, we see this gap over here on the daily chart, and it definitely can find some areas. If you look at this shelf right here, it also comes out to where we were at before. And I've been telling you guys to keep an eye at this 110, not flooding the market. I'm not mad at the market. It's not the end of the market or nothing like that. But hey, a lot of times prior resistance becomes future support. Yeah, on the daily chart, we were holding this. We had some red candles in an uptrend, bouncing, no sell signal. But now we got to address this. You know, we do have a sell signal on the daily chart. Volume profile, we have a nice little gap to fill, and it would be interesting to see it fail, you know, these previous lows they have. You see right here, this, you know, holding on here, holding on here, holding on nonstop. All these arrows were holding on to these previous lows. If we break these previous lows, you know, we're not going to be surprised. Anybody who has that bell notification lit on this channel is not going to be surprised if we see the price come down to that 110. Interesting enough, and this is why I love the 50 moving average. It's really powerful. If you look at right here, this 110 section, look at exactly where this 50 moving average is laying down, almost right at that 110. So, you know, with a sell signal on the daily chart, you see this volume gap over here. I'm seeing some, you know, if we took out these previous lows, I'm seeing prior resistance becoming a little bit of future support. And we also have that 50 moving average that it can either bounce off of and go right back up like we've seen it do before, or what could happen, it can go underneath and then we can come to this upper value range a little bit lower, really taking some money off the table, but not the end of the market, but coming down to 103, giving you guys these opportunities. And this is what we talk about, the intro of the video, you know, the intro of the stream, investing in yourself. This is where you guys can monetize the chart no matter which zoom out a little bit and check out what we got going on. I'm about to bring Blunt up in just a second. I see the stream filling up. I need you guys to share this just a little bit more. About to have a legend coming up right here. So here we go on the 4-hour chart, giving you a clearer view of that exact area. And I'm going to take this off for just 1 second, one little second, just so you guys can see how we've been bouncing on this nonstop. This 4-hour chart showing us boom right here, bouncing again. And on the daily chart, we do have this where it's bouncing here again. You know, the question is it going to go lower? How low can it go? These are some of the sections that we've been talking about. That 115, which we touched before, and even coming down to that 110, which we found also on that higher time frame. So, man, I'm still very bullish on the market. These are just little, you know, retracements, short-term volatility in the market where there's overall crypto adoption happening. So I'm about to bring up a legend right now. The stream is really turned up. I like seeing everybody pull up. We're live on YouTube. We're live on X. We post these shorts later on TikTok as well. So we're really making a huge impact, and you guys can help with the impact if you guys share these streams. Today's going to be an ISO-friendly kind of stream, and I'm going to bring up XRP right away for this XRP community because this is what we're going to focus on. And I'm bullish on this because this community is on fire. But without no further ado, Blunt, welcome in today, man. How's it going?
Thanks, Rico. Everything's going great. I'm happy to be here. Thanks for inviting me. I appreciate it.
Nice, man. I really enjoy these streams, and a lot of people do as well, man. I saw the chat. If you go and join the XPX chat, there's so many notifications on that post that I made because I put the thumbnail just so everybody knew, like, hey, this is going to be a Blunt House heavy stream, so you guys better pull up.
Yeah. So, a legend because he's of his age.
No, for many good reasons. We'll let you say that, but for sure, man. I'm really excited for today's stream. We talked a little bit before the stream started about kind of the sentiment around these ISOs and stuff like that. And before we just jump into the technical analysis, can you give me like your overall sentiment on ISOs and why you think that they're something important for people to look at before we just jump into some candles or whatnot like that?
Yeah, when I go back to when I was first introduced to this space, I didn't really learn about what XRP and XLM and XDC were really all about until a few years later, right? That I was kind of starting to understand that, they may have an application in traditional finance and all those wonderful things. So there was certainly a use case that you could see down the road if the moon and the sun and the stars lined up on the right day.
Right.
And at the time I started thinking, geez, I'm surprised no one's put a fund together with ISO compliant coins. And, in hindsight being what it is, it probably would have been a great idea, right? Because all of those coins just consolidated and consolidated and consolidated, which seems like forever. But I think that speaks to, the individuals that were holding to their assertion that they actually were onto something, right? And they believed and they hung on and they continued to add. And you have to tip your hat to those people, like you really do, right? That's we're not here to shame anybody. I think we're here to pat those people on the back because they did exactly what your grandparents would tell you to do. Buy stuff you love and hang on to it forever. Yeah. And it worked out. And there's probably more upside there. With everything new, though, there's always the ebb and flow, right? Like we don't think about and I look at the crypto market almost like how when the automobile was created, that's blockchain technology in modern times. Right. When the automobile was created, there were no roads, there were no laws, there were no places to buy gasoline. The concern was we couldn't power them and so on and so forth. But yet we have cars everywhere, right? Like it all worked out. At one time, there was probably 1,000 some odd car manufacturers. There's not that many today.
Exactly.
But there's, the ebb and flow of every industry. And we're really at the inception stage where we're just starting to build the roads. We're just starting to have some laws and some, guardrails around what we're doing. So it's the early stages. And that's always kind of filled with risk as well, right? The technology offers so much promise, but we just don't know whose promise is going to pan out, just like we didn't know whose automobile was going to end up being a staple, right? We just didn't know. So, you know, you have to credit the commitment that those people made to those coins. And and I think it speaks to the fact that use case is important, right? They believed it years ago when everyone else just maybe couldn't wrap their heads around it, right? And I think it proved that a strong business case means something, even in this space.
Yep.
Right? Because not to take anything away from a lot of others, but these things do have a use case, right? But you can actually peel the onion back and say, yeah, they have a market that they can monetize. And I respect that. Privacy is the other thing. I think that's going to be next. So.
Yeah, and speaking on that, before we get started on XRP, big shout out to everybody pulling up in the chat. I mean, this is huge, right? And I think, you know, like you said, it's super early. I think you brought up a really good point. That's why I love to have these conversations. So it's just not me over here doing circles and stuff, right? We can do circles together, but but it's true. It's like this is like the really early stages of like how the automobile came around. Like, that's why I'm so locked in, Blunt. If it was like just something run of the mill, I would not be spending this much time doing this. But I know that we have a really good opportunity. And like, even like you said, there was thousands of different automobile companies, and I'm a big gearhead. I love anything with machinery in it, all that stuff, right? I mean, I know how it all works and stuff. So like to see that industrial revolution happen, and obviously not everything stick around, but the fact that you have that same opportunity, you can be the next Ford. You could be, and not to say that if you came later on, you don't get a chance, right? Because we got things like Tesla, right? You can have something like Tesla that comes out, but what's nice is that you're right here in this stage that I hold connected to like the cars. Also, you know, I'm an 80s baby, and I grew up through the 90s seeing cell phones come to life, you know, from pagers, from the beeper being a rectangle, from the beeper getting see-through with that Motorola, to flip phones, you know, to turning into a touchscreen. Like, I've seen these things happen. So I understand when it's happening. It doesn't always have to make sense to me, but I know that this is our chance of our era of this happening. So like you said, man, and you spoke volume right there when it comes to utility and use case. I'm really big on that, because I think this is how you make sure that you last, right? Somebody said, I remember the rotary phone. Do you remember having the phone in the kitchen with the the phone numbers written right there, and your mom getting mad that you wrote down the number that your friend gave you while you're on the phone, and you didn't want to get no paper, so you wrote it right next to the phone, and your mom was like, I don't want nobody writing on this wall. Who was this writing on the wall? And then, you know, it's always was me and stuff doing this stuff, because I was the oldest and I like to learn the hard way. But yeah, we got some rotary phone users in here. We got some flip phone users in here, some pager users. But this is where we're at right now, Blunt House. And you spoke about use case. And one of the reasons, even like with the project I launched, X Pays X, one of the things that I wrapped it all around was the use case. Like, if you read the Satoshi Nakamoto paper, you know, it talks about an electronic cash system that makes, you know, easier. And when you look at like how the world has been changing, and you look at things like XRP, obviously, who's been, you know, rolling this out from the very beginning, this is why I've always stuck to this idea of this level of use case, because it's not hard for me to wrap my mind around that people are going to need this. You know, we got so many different, you know, traditional finance providers that if you're one of the early ones coming in through this crypto space, you can be one of those big names. You can actually do that. So we got XRP up here, Blunt House. We have tons of XRP people that love to listen to what we got to do with the Sidekick. Somebody said the Sidekick. I remember I had that one. I thought I was so cool, man. Oh my God, I thought I was so cool with that Sidekick cell phone. But yeah, we got XRP today, Blunt. I'm gonna let you share your screen if you want. And actually, and the XRP people, I want them to really just tap in with us, because, you know, we talked about these pullbacks already. And, you know, I want everybody to know, when we talk about these pullbacks, it's to give you guys either an opportunity to monetize this chart going down, or for you, if you're an XRP believer, where like you've been completely XRP pilled or whatever, giving you a better entry to accumulate some more. So your DCA part is going to be a little bit better, right? So I'm about to bring up Blunt's. Let me bring this down, actually. There we go. There we go, Blunt. You got your screen up now.
All right. Excellent. So what we're looking at, everyone, is this is a trend spider chart. That's why it looks a little bit different than the trading view charts that we use all the time, but I'll switch back and forth. What I like about TrendSpider is that it's got some dynamic AI and technology stuff built in behind it, and some really cool tools, including auto fibs and things like that. But what you're looking at is a daily of XRP. And I think what I want to explain is that, and if you look back into your bottom left-hand corner, you're going to see where this thing just kind of launched itself. And that's out of a long, long, long period of consolidation. And there are not a lot of traditional traders that will sit through that. So most of those people in there are long-term investors. And, you know, when you see all of your moving averages kind of twist together like that, the move that comes out of that type of consolidation is typically parabolic up or down. And I think you see, you got your answer on what that was, right? And what's happened since then is it's created a range for itself within the volume profile that you see to your right. The green is bullish volume. The red is bearish volume. The upper blue line here is the upper range of the value area. Down here, you see the lower range. In the middle is the VWAP, which is volume weighted average price. T-line and 5 EMA. And then I have some anchored VWAPs, which we'll talk about in a little bit. And this has been ranging pretty efficiently through the VWAP and the ranges of the volume profile. And the interpretation that I have is that it's just another period of consolidation of sorts, right? The range is pretty much defined, the high end and the low end. You can tell this down up here is obviously where no one is prepared to go yet. Nobody wanted to let it drop too far below that value range to the low side, which tells you they have some hope for price going higher. The biggest concern right now that you would have is this big gap. And what is the gap and how is it created? If you notice where this range of the gap sits, it's within these parabolic candles, and then back here, parabolic candles both up and down. All of that is super light trading. I like to say those candles are just filled with fairy dust and air. And when they're challenged, like so here you have them to the upside, and when they're challenged to the downside, they don't have anything in them to hold price up. And you can see that there's a large range here that is very gappy. And eventually these gaps get filled. The takeaway is that it's not the end of the world, right? This is just how price moves. When you go parabolic, either up or down, you're going to create a gap. If you go parabolic up, the gap will be created to the downside, like you see here. If you were to go parabolic down, there would be gap opportunity to the upside. It's just how price moves. And too many people get freaked out by each daily candle, right? Even when things are going their way. Like, so for example, this red candle here probably caused somebody to sell. Just because they thought they had a really good run and red candle showed up, might as well take it off. Or someone who maybe considers themselves to be an investor but doesn't really have a knowledge of how to read price on a chart may have felt really good about buying up here without the understanding that that was a top. So you don't have to be a trader to be able to appreciate why reading price on a chart is important. And again, it doesn't matter the time frame that we're working off of. All the rules are the same. Now, I just went to a weekly chart, and we talk about this in our streams all the time. When price gets too far away from the 5 EMA and the T-line, like it did here, it's that horse that doesn't like to be too far away from the barn. It wants to come back. And on the weekly chart, that's all that's happening. As a matter of fact, we haven't even hit the 5 EMA on the weekly. But on the daily, it's been some dramatic days.
You know what's amazing that you said, and if my brother's listening, I don't know. Sometimes he likes to tune in, but the horse does not like to leave too far away from the barn. That is true. They will find their way back home every single time. I've been on trails with them, and yeah, they'll find their way back home. It's almost autopilot. Once they know that the little ride's over and we're basically in our route to go back home, all you got to do is basically sit there, keep the reins by the horn, and you're basically going to be riding all the way back home and stuff. So
Yeah.
And you know what, Blunt, like something that was really cool, and I see a lot of XRP people pulling up and having a good time. This is a perfect place to get all your XRP people to pull up so they can find good entries, right? Because a lot of times
Absolutely.
what happens and makes people shaky is that they get in at a place that starts making them second guess everything else that they're doing. They buy right at the top, and now they're so out of sync that anything that they see coming up now, they can't even get out of that type of distortion that they're looking in right now, right? So
Yeah.
Although we're finding the tops and we're telling you guys where it can come down to, this is a great way that when you find your right entry, you feel a lot better. You feel a lot more confidence. And I promise you guys that goes so far in this stuff, because half the battle is in your head. So if you're not confident about your strategy, you're already losing half the battle. So,
and you know what? We often make this more difficult for ourselves than it needs to be, right? So if we start to peel this onion back a little bit, we know that price, in typical stock markets anyways, I don't know about crypto, but the stock market likes to go up 6 to 7 out of 10 times. So you're already weighted to the long side. So and you have 3 choices: up, down, and sideways. Well, if 60 to 70% of the action is going to be to the upside, that makes the job just a little bit easier from there. And sometimes we forget all of that stuff, and we get lost in the short time frames. We don't zoom out. A lot of people have no idea what's going on the daily, and as a result can make all kinds of mistakes. And this actually would be a good example. If somebody's sitting on the 15 minute chart, never looking at the daily chart, you might not realize that this is a big ass top. Right. So, and, you make a mistake up here, and then it's always, and everyone has that friend that says, oh, you know what? Yeah, just wait for me to buy and price will come down. Right. That kind of thing. And that's simply because they just don't know yet or understand where price is on the chart and why it's relevant. That's all. Like, you don't have to become a technician to appreciate and take away some of these skills, because they will save and make you money. So if you were looking to adding to your bag, let's say you're a long-term holder, you're going to look at the daily and weekly charts to find your opportunities. Yeah, might sneak a look at a 4-hour once in a while, but really those are the time frames you're looking at. And if you're looking at this daily, you see this gap and you're like, okay, that's opportunity for me to the downside. So do I have capital available? And this is why you should always either have cash or be in a position to raise it to take advantage of the opportunities on the chart. So where in this gap might price want to go? Well, stop 1 is going to be, this is the anchored VWAP for price. And these anchored VWAPs act like magnets for price. So that would be something that would get my attention. I would have my look at, an eye on that level of 277. If it doesn't hold, you drop down to the VWAP, which is in line with the 50 MA. Time and price will come together. That'll level off, and that might be exactly where it wants to go. It's respected the VWAP before, right, to the upside. So this creates a support and resistance level that we're going to check again, right? So it's the old adage of, support and resistance flipping themselves all the time, which one day is support is now resistance, and vice versa. Sure. As this was to break down, what's your target? Well, you're trading above the 20, the 50, and the 200. So those are your 3 kind of key major moving averages. Some people will say the 21, but we're not going to argue about a day, right? 20, 50, 200. So the 20 becomes a target. So you hit the 20. You also hit the upper value range that this solid kind of ice blue line here. Another reason to have that as a target. And that's what these levels, so people will say, oh, you can't know major moving averages don't mean anything. Well, people that say that obviously don't know what they actually represent. And that's just ignorance, right? It's a representation of time and price. And that time is relevant and the price is relevant because everything is fractal. The market is one big nesting doll. You open up the monthly doll, there's a weekly inside. You open up the weekly, there's a daily inside, and so on and so on and so on.
Yes.
Right? So these levels were targets. But now that we've hit them, one of three things is going to happen. We're going to go up, down, or sideways. When we see a anchored VWAP, the 50 MA, and the 200 MA kind of at the bottom of the gap, creating a new shelf, with the point of control also down here, I'm more inclined to believe that price may want to sink to meet those levels. But again, it's not tragedy, right? It's just the ebb and flow of price. Listen, we created this. Traders created this. Investors created this gap. Well, now the gap is going to come back and get filled. But don't complain about it on the way down when you were when you enjoyed it all the way up. Right?
Yeah.
It's going to retrace, right? So if we believe in how the market likes to move, let's throw some fibs up here, reset them. Okay. So this is just, I believe in fibs, which you see on your chart, fractals, which is what we've talked about, all those different time frames, and filters. And the filters are things like the T-line, the 5 EMA, and some of the other things I use, momentum bands. But Heikin Ashi candles would also qualify. Anything that filters noise. So here we have our fibs on the chart, taking the swing low to the swing high. So as soon as you see this area here and price starts to fade and this doesn't actually take out and create a newer higher level, then that becomes your swing high. So typically, as a retracement, we're quite comfortable with 0.618 as a retracement. Most traders, and I'd be one of them, quite often trade to those levels along with other validators. This chart is just perfect for what we're talking about.
It sure is.
So here's 618 right here, right along here with the 50. Well, that's a draw for price. This other line here is the VWAP, volume weighted average price. So the fact that the 50 MA, the VWAP, and 618 are all within a nickel of one another, I feel pretty good that price will want to come back and find that level. I'm not saying all in one candle or two candles or anything like that. It's a process. Nothing goes straight up, nothing goes straight down. So just using fibs alone and some of our other levels of past price, right? One of the things the volume profile does is it tells you where money has and has not been. And in the areas where it has not been, that's where you're going to see your gaps. So if price falls into the gap here, which means it fails the upper value range, it'll want to look for the anchored VWAP for price.
Nice,
So-
bro. I want to. No, go ahead.
No, I was
I
just
want
gonna
to
say,
show them something.
That's the daily. And now we're going to look in a minute. We'll look at the weekly too.
Sounds good to me. Sounds good.
And I'll let you go. Did you want to ask
Appreciate
something?
it. No, yeah, no, I just wanted to show because we've been covering XRP so much lately, and yesterday, in the last couple of days, we've been covering. I really want people to get into understand some of these phrases because these phrases have been helping me out so much. And I think you were on the other one as well. Here, let me bring this up really quick. And on the 4-hour chart on XRP, this is that perfect example, fam, that I was telling you guys about of that first mouse. Okay, think about this mouse keeps popping up every time the first one gets to squeeze and the second one gets to cheese. And the reason I can tell you guys is because I was this first mouse every freaking time. So if you guys feel like you got into a good trade, the trade is going in the right direction, but a couple candles start to go up. You know, you might even get a signal. You're like, you know what? I'm in the green. Let me just get out of here. Let me pack it up and get out of here. But this is a perfect example on the 4-hour chart of this first mouse gets the squeeze, second one gets the cheese. And if you guys have been listening to me talk about XRP the last couple of days, I even drew this kind of, you know, I almost get in a John Madden mode. But if you guys look at this 50 moving average, it'll trail like this and kind of curl back up. And this is that first mouse getting that squeeze, second mouse getting the cheese. And if it trades to this lower volume or this lower volume profile right here, you guys can see the price is 286. I said this might be a good area to look. And if it, you know, markets got bullish and it starts to get back above this 50 moving average, coming back up to the point of control, is where it can flip around. But if not, we also have this other downside. You know, we're talking 226 XRP. We can go through a really nice shakeout as well. But this is what I was looking at, where, because I'm speaking from personal experience, where I had these instances where I get a decent trade, but then I don't understand this. And when you're trading underneath the 50 moving average, I swear it's a lot more bearish things are going to be happening, right? When you get back above it, it turns into a bullish day and everything like that. But when you see times like this, and if you see, and like Blunt says a lot of times, almost always that first retest fails. And this is a perfect example. Here it goes. The first retest to the 50. Oh, guess what? It failed. And now who stood in this short is really printing that cheese. Now that ride might finish right here. This might be your first take profit at 286 in that short. You might want to leave a little bit in there, because if it fails that lower value profile, this lower value range right here, it could fall into this gap and go lower. But if it started trading and bouncing into this 50 moving average again and getting above it, that's usually where it turns around. So, you know, it's just cool, Blunt. You know, we refine this thing almost every single day. And sometimes people might think, oh, it gets redundant. But you know what? It takes time. It doesn't all happen in one candle, right? We got to watch this thing happen and dial in to be like, boom, there it goes. I told you guys, this is what it could look like. I'm not promising that, but something like that could happen. And you're seeing that happen right now.
Yeah, there's kind of like an anatomy of a breakout or a breakdown, right?
Yes.
And you know, when you've seen it enough times, you know, it does become instinctive more than anything else. And it's possible. One of the things that gets lost is time frame relevance. You know, you can be having a conversation about an asset, one person's bullish, the other person's bearish.
Yes.
And then you realize you're not even talking about the same time frame, right? So you can be bullish or bearish on the 4-hour and the opposite on the weekly, right?
Mm-hmm.
Like, so, you know, don't get your knickers in a twist when it's time for, you know, that's more than possible, you know, to be trading something short term, but have a different long-term perspective, right? You know, what we're seeing on the weekly, so we've identified where the risk would be on the daily chart, right? We showed that. Now we're looking at the longer time frame, right? This is the weekly chart. And that weekly chart, this is gap, right? So here's your upper value range. There's your lower value range. The fact that we're trading above the upper value area on the weekly chart, consider this to be a premium of sorts on this time frame. Now, here's where we're going to put this to the test, Rico, and we're going to have to come back and over a period of time and check this.
Yeah, I like that. I like that we're going to have to put it to a test. So make sure you guys keep that bell notification lit, because we're going to put it to the test. That's what we're going to do right here live. No script, no cookie cutter stuff. We're just going to do it right here in front of you guys. I love that.
Yeah. Shout out to the TrendSpider people, because, you know, I love the platform. I love TradingView as well. But one of the key reasons that I subscribe to it is for these anchored VWAPs alone. Here is the anchored VWAP, this purple level here, and that's the anchored VWAP for volume. Down here, we have the anchored VWAP for price that's running parallel to the 50-day moving average on the weekly chart. So why is that relevant? Current price likes to revisit past. So what we're seeing here, and I'm just going to I'm going to have to take this profile off. There. Just for 1 second. So what we're looking at right now is just a process of where price is coming back after being a little bit too far away from that barn. And again, this is on the weekly chart. We could easily demonstrate this on a 5-minute. Too far away from the barn, coming back to the 5 EMA. So on this push up, my initial advice would be, okay, you're still in an uptrend. Be careful of the pullback because it's going to want to come back and test the 5 anyways, and or the T line. If it was to fail the T line, let's say you get a close below it, and enough momentum happens that pulls the shorter term time frame, which is this 5 EMA, down through the T line, that changes the trend. Right? So you can actually have on a weekly chart like this 1, 2, 3, 4 candles before you notice a confirmed change in trend. And when you kind of get that confirmed change in trend, what's going to be a draw for price? Well, the other thing that price doesn't like to be far away from is the 20-day moving average. And the 20-day moving average right now is sitting at, let's say, 240 with the anchored VWAP at 253. Now, again, time and price will alter these levels a touch.
Mm-hmm.
But if you don't hold the 5 and or the T line, right, and you get a breakdown, and then all of a sudden you're trading on the south side of those levels as opposed to the north side, then you have to take these points as targets. Or if you're a long-term investor, those are your opportunities to buy. And this is why, you know, a long-term investor really needs to understand this stuff. Because if you buy up here and price comes back to the 200 weekly, seems irrational, but it's not, right? Like we know these things happen in this space.
Absolutely.
Right. And then it would take out the previous high or something nonsensical like that. But nevertheless, if you were a long-term investor, like, and they're going to tell you that, you know what, yeah, I'm just going to buy it and close my eyes. Bullshit. When you buy stuff and you lose 2/3 of your value,
Mm-hmm.
you're not closing your eyes anymore, right? This would be dead money, and you don't want to have dead money, right? You want to have money that's gone to work for you. This is money that's gone to work for you. This is money that's gone to work for you. But you don't want to be buying up here as there's a reversal. That's all, right?
I agree with you. I mean, and I just want to say that because we just kind of touched on something that's really important. And like you said, some people say, I'm just going to buy it and whatever. It's like, you know what? You feel a lot better when you buy it on the dip. When you're doing the opposite of everybody else, I promise you, there's very few people that it's like smart money feels differently than everybody else does. You know, a lot of people got to sell themselves something, but smart money lets the money do the talking for them. You know, if you're like Blunt said, a long-term investor, you know, you don't, why not just get a better entry and stuff, right? Okay, I'm bullish on XRP long term. I could buy it right now and cool. It doesn't matter. It's going to go up to $7. But you know what? I also feel a lot better, and I'm not going to lie, that if I waited for a nice little dip and I got more extra XRP, because instead of loading up right now, I'm waiting for that confirmation. I'm loading up on it at, you know, this gap down here at 240 or something like that, and I get a bigger bag of XRP. You're going to be a lot happier when XRP goes right back to its all-time high. I guarantee. Okay, so
absolutely,
yeah.
And what you're looking at now, and hopefully you can see this. There's a XRP on the left, XLM in the middle, and XDC on the right. And on all three charts, you have a volume profile, and you'll see the upper and lower value ranges on each chart. The POC is purple on each chart, and everything else is the same. All right. It's reassuring when you look at these three charts. Let's say you're an XRP holder, and this look kind of allows you to see that what's going on is moving as a group, right? You have XRP, XLM, and XDC essentially moving in the same direction at the same time. Going back to the value of building almost like a portfolio or fund of ISO coins.
Yeah.
Right. You can see, you know, this, if you hold this stuff, at least you know that what's going on with the asset that you hold is kind of going on with everybody else too. And that works to the up and the downside. So this thing is moving as a unit. And they haven't started to, you haven't seen one decay and the divergence yet, right? They all seem to be moving in the same direction. Right? And right now, they're all vulnerable to the same thing too, and that's the big gap on the daily. And the only reason it's there is because of this gigantic move higher. That's the only reason these gaps are created. So, XLM, you can see that's a significant gap.
Yeah.
Here's the 50 right down here.
Yeah. I mean, when I look at these gaps now, and this is why this is important, and I'm very, I'm always very grateful you coming out here, because this has changed the way that you look at it. Sometimes I've been in that position, and I know there's somebody listening right now where you've been in a trade and you're just like, why the heck is it going down? I wanted to, why? Well, now you know, because that volume gap was created from all that little fairy dust we just pumped up, right? So there's this where we created that as buyers, as traders. All the traders created that gap where eventually we have to come. When you start to understand that, it's like, I swear, a little bit of that stuff that would irritate you. There's little things about the market that maybe it's a bunch of little tiny things that irritate you, but these things add up as a big distraction. The more that you start to learn this and understand this, all these little tiny distractions get out of your way of, like you saying, like how Blunt said in the beginning, every time I buy, it goes down, or hey guys, I'm about to sell so price can go up. It's like, that's because you're not using this. You don't understand the gaps. You'll let me know right away that you're missing a piece of what's supposed to be going down when you're looking at these prices and things like that.
That's 100%. Like this stuff, we make this a lot harder than it really is. And you and I are talking about it because it's the kind of thing that we engage in every day. And we may make it sound like it's too easy, but it's really not that difficult. The way that I've been kind of trained to look and analyze a chart has evolved over time. And I would expect that to happen for anyone, right? I was fortunate enough, I learned by a gentleman, his name was David Steele Smith Elliott. He's passed away now. And then the other was Stephen Bigelow, who's also passed away. But I learned the T-line and how to trade it from Stephen Bigelow. I learned about, the first touches and current price revisits past and the volume gaps and a few other things, how to trade averages from David. And then, over years, you kind of throw in your own little nuances. And, before you know it, you have a system. And, what you're looking at right now is, I wanted to show this 4-hour Bitcoin chart because it's in our streams. It's one that we've used, our FEG token streams. We use quite a bit. And, going back to, I think this was May something, 27th, we drew this yellow line, this simple yellow horizontal line. Why did we do that? And keep in mind, here's what we're looking at. On that day, that's what we're looking at. As soon as we could connect this top to this level, we popped it on. And the reason is because price will work in waves and it creates levels as it's doing that. Right? And we know that over time, we would say that at some point, this level again is going to become relevant. You don't know how, you don't necessarily know when, you have no idea what happens after the current candle that you're on. But we knew that it was going to be relevant again. Right? David Elliott used to have this little saying, the first attempt, you show up at the door with flowers and chocolate, and the door gets slammed, and then you got to go home and get some more flowers and chocolate and make another run. Right now, he was dating himself and saying that nobody does that anymore. But
right.
But you can see the point he was trying to make.
Yeah.
And then eventually those levels, and I want you to notice right in here, you see how you bounced around at this level for, basically, better part of a day and a half, and then lift off. This level is very relevant. Now, it's going to create another level. So what we did a couple of weeks ago is we created this level. Why did we do that? Well, we started creating this base here, and that was looking like, quote unquote, another level was being created. And look what what happens to follow.
Yeah, it's beautiful.
Right? Like, okay, it's not pin the tail on the donkey. We're never going to be to the penny all the time. It's our job to get you close.
Right.
Right. And the reality is of this level is that, okay, this is the point of control, upper value range, lower value range. Price has been grinding along sideways. So that's consolidating using this level that we identified as support. My interpretation typically is the longer that it holds, right? Like this was creating a little bit of a nice base here and then a run, and then a run up and then another base. Sometimes you get the staircase up, right? And I was wondering if this was going to create another flat surface before another move higher. The failure is you drop into this gap, right? You have a 1 in 3 chance of being right. And we just use the tools that we have to try and refine that a little bit further. Lower value range is what you don't want to break. But we're still within the same range we've been in for several days.
Facts.
The risk is
funny enough is that, funny enough, that gap is exactly where that yellow line is at, right? So it's like, if we lost that support, and that's where sometimes people are like, man, what happened? It's like right there, that's a perfect representation of like how that prior resistance that we kept crashing above, we put that first yellow line, then we broke above that, but because we broke that resistance, and usually when you break a resistance that's been hard to break for quite a while, it moves up exponentially. So then you created that gap, and now we made this new support above that. But now you can see that if we came back down, how very easily we could come back down to that prior resistance and turn that into support, because there's incentives with gaps all over on the right with that going on over there.
And basically whenever you see this gray area up here, that is lightly traded areas, unlike the solid blue that's more densely traded. The concept of the gap within that area is still the same. You just have to remember that because there's light trading there, that if you fall into it, it could actually fall quicker than it might even in this neck of the woods, because the trading is already light. So you've identified what the risk is, right? This level is also structural, as it turns out, right? All this in here. So you come back to the 50, you either bounce or you fail, right? This would be a first attempt of the 50 since you broke out. So you would anticipate that it would get some support at the very least, right? If it bounces off here, what does it want to do? Well, first off, it's going to get into this gappy area so it could jump up quick again. And it's going to want to take out the previous wave's high. Right? If it fails, and this is where it gets sketchy, it's going to want to take out the previous wave's low.
Yep.
Right. So these are the things that technicians will see that other people may not, just not because, they're ignorant. They just don't have the skill set to look for that. But you can see why it's valuable, because it allows you to monetize the chart in both directions. So when people tell you, hey, you can make money in a bull market and a bear market, that's how you do it, right? You monetize the chart to the upside and you monetize the chart to the downside. And when you're on a daily like this and you see a sell signal after some flat trading, back the chart up, right? Shorten your time frames to try and get another look at what could be going on. So this is interesting on the 12-hour because you really want to hold the 50, which is also the upper value range and right in line with the area that we've drawn before as support. And here's your gap that's still there, right? So this is why we do multiple time frames. I'm always looking to know, I always want to know where the 50 is. Am I bumping my head on it, or am I going to be sitting on it, or what's going on? Because it's very relevant. You back it to the 4-hour, same drill. We're just trying to find where the support and resistance is. Now, what have we showed when you start to you see all these averages twisting together? You've got the 20, the 50, I think the 100's in there as well. Like there's a whole bunch in there, and you're kind of failing it a little bit.
Yeah, it was rolling over a bit.
Yeah. Now, we look at the stupid 4-hour candle and, it's 60% wick now. So, who knows? This is the volatility that kills people. right?
Yeah.
This is the stuff that washes people out, unfortunately.
Yeah.
Um,
I want to do a little intermission really quick.
Mhm.
I want everybody to definitely smash the like button. I'm going to share something with you guys really quick because it's very important. You know, we're coming up here doing this thing for you guys. Actually, I was watching CFX while we're trading while we're talking about it. But I want you guys to come over here and give Blunt a follow. Like I said, sometimes a lot of you guys be listening to people that got a whole bunch of followers, and 1 minute they're telling you, panic. 1 minute is good. We're giving you guys the stuff that you need, so it doesn't matter what the market's going on. Like, you're not going to care that, you know, the majority of the spaces everybody's panicking. You're probably going to be the only person dressed up like the wolf in Little Red Riding Hood, because you're still going to be making money, right? They're going to be like, oh my God, what big claws you have. It doesn't matter that the market's pulling back. You're still out here, you know, doing your thing. So Blunt also has a partnership with BYD-Fi. I do want to show this. I want you guys definitely to get this up, get the numbers up, so a lot more people can learn over here. This is Blunt 420. I'm actually going to post his website as well. I'm going to post a couple fire links for you guys. If you guys don't come check these out, that's on you, okay? We need you guys to swim to the edge of the pool. We're not going to jump in the water. We're giving you guys a hand, but you gotta grab my hand. I can't swim anymore, and Blunt sounds too relaxed to be trying to jump in the pool and save you as well. But if you come and swim to the edge of the pool, we're going to grab you and snatch you up. We got a lot of great information. This stuff, fam, I mean, I was just talking to our teammate, Ali. I've seen him in here earlier. Maybe, I'm not sure if he's still in here, but, you know, I was talking about Blunt because I'm living proof of this right now. Okay, guys, and even like David and them, you know, we were all talking in the team chat, and, you know, I'm very transparent with myself because I like to hold myself accountable, and I wear my heart on my sleeve. What you see is what you get. But I was mainly always focused on longs, and because of that, what happened is I would get impatient and force trades, and that's where, although I could be a profitable trader a lot of the time, some of the times I wasn't, because I was forcing trades. Now, if you guys start to pick some of this up, you won't have to force trades. Whether you're somebody who leans towards more on shorts or more on longs, you'll be able to monetize the chart anyway. You'll be indifferent to really the price, which way it's going. It doesn't even matter. It's like looking in the mirror. Okay, it's the same thing. The mouse gets the cheese on the second one too, when it's going up for the first time as well. And you'll start to layer this all up. So if you guys want to, you know, show some support, some of the stuff that we got, definitely give Blunt a follow over here. Also, definitely check out, he's got a bunch of referral links right here. Maybe you guys want to check out Weeks, Trade Feg token on there. I know it's listed on there. You got your BYD-Fi, you have your Blowfin account, and you have your XOLix. I can really speak for Blowfin. That one's really fire as well. And obviously, you guys know that you guys can join my BYD-Fi account as well and join this Telegram where we got signals for you guys. It's free. If you guys can't snatch up free money, I don't know how you're going to take up any other money, but this is free money inside of this group right here. Those links are down in the description, fam. And we're going to keep giving money away. I just checked in with Michael, I think yesterday. I'm a little bit delirious because my sleep's all over the place, but where I was like, hey, we're running it again. And it's like, yep, because every Monday I check in with them. I'm like, hey, are we running some more giveaways? You know, I want to get some people in here. So make sure you guys join this Money Bags Trades. When you register for your BYD-Fi account, you'll have a UID number. Send it in there, verify, let me know, and I'm just going to give you the money that they're giving out to you guys so you guys can practice all this crazy stuff that's not really that crazy that we talk about with their money, and practice like that. And if it runs out, no big deal. Let me know. Just use the demo account, right? Let's say you run out of that giveaway that I gave you, or Blunt gives you, or whoever gives you. Just go to the demo account and trade on the demo, right? And get a feel for that. Maybe you're a DJ and you want to trade the full DJ mode. Go to MoonX.
It's wild in there.
You know what? We might have a session on here where we can laugh of how bad we can get wrecked for the day, and how professional traders can also lose money on but yeah, we can have some fun over here on one of these trades. We'll do this, and we'll come over to the dark side of crypto. And if you guys are interested in that, the new listings, you guys can check that out, whether you're a BSC degen or whether you're a Solana degen that wants to check out what's the hottest off of Pump Fund, or the hottest off of the Bunk Bot. If you want copyright infringements from Coca-Cola, but you still want to invest in it because you don't think Coca-Cola is going to sue these people for using the Coca-Cola brand, you know, put all your money in that. There's no way Coca-Cola is going to sue them, right? No, but come over here, have some fun on BYD-Fi, trade some solid, you know, your favorite coins with up to 200x leverage, which I don't suggest you guys do. Trade on a demo account, trade on the MoonX, but it gives you guys a lot of opportunity. Some of this information that we're soaking in while we're having fun together, where you guys can come over here and trade your XRP, trade your Hedera on BYD-Fi, or, like I said, go full DJ mode. So just wanted to bring that up, man. Blunt, what's the next ISO token that we'll look at while we're here? We're rolling up on an hour, but I think we spoke a little bit about Hedera. Maybe we can.
Yeah,
I feel like this is a sleeping giant a bit. Yeah, I think. I think this could be something. It could be something.
Yeah, and I have a friend of mine that has been in this thing probably since it started, and has never wavered. Yeah.
Wow.
So talk about a believer.
Yeah.
This is, an example of the chart that doesn't look entirely different from some of the others, which should probably be comforting. I'm just doing this out of curiosity. Okay. So this big move up, if we were to run fibs on the whole thing, 618 is right in here at 17. I'll call it 18 cents just for interest sake. So if I know 618 is here, it's in the same neighborhood as the point of control and the 50 MA. Obviously some gaps to contend with in here on the way down if you're to hit them. So what you're looking for is for price to hold the 20, right? So we talk about this all the time. If you're trading above the 20, the 50, and the 200, regardless of time frame, and these runs can continue for quite a while, but at some point, you're going to come back and start to check those levels, right? As you can see here, this is a good example where you're running a little too hot, which means when you're running price well over those three major moving averages, you're in a big bull run. But here you have a top. And one of the things I want to point your attention to are points and flats. So when you see points on your short-term indicators like you do here, and this is a 5 EMA, the white one,
okay,
that's indicating a change in direction. And the shorter time frames will obviously pick that up sooner, right? You can see how the T line, which is the 80 EMA, shows it, but doesn't necessarily show it as dramatically as the 5.
Right.
But when you see points like that, it's usually an indication of a change in direction. So you got a point, you start it to fade, right? 5 EMA starts to sense the fade and price pulls back. Now we're sitting at the 20. We didn't really hit it here, so I don't want to consider that a touch, but it's close. But nevertheless, we're sitting on it now. And if you don't hold, then, because if you fail one level, you'll find the next. If we fail the 20, we're going to look for the next major down. In this case, is actually the 200 at the bottom of a gap. Now, we know the 50 is going to move quicker than the 200. And what could happen is that, in the next few days, the 50 ekes its way up a little bit, and they might actually twist and come together here or close to it. The bottom line is, or the takeaway is, that they will be a draw for price. So if you fail the 20, price is going to gravitate to that area. This could be Bitcoin. It could be IBM. It does not matter. Right? Technical analysis is the language of the market. It's a real-time representation of what money is doing, not what people are saying. That's why we're interested in money in and money out. Right? This is money in. That's money out. Right? And, we make ours in between there. Right? That's kind of what we do. And the technical part of this gets a little spooky sometimes, right? I'm just going to shut the volume profile off. I'm going to go to a weekly chart. And we're going to go to, or maybe this is a monthly. I'll do this off of. Yeah. This is a monthly chart of the 10-year treasury. So that is the interest rate that's being put on the bonds. There we go. So I just added a 1,000-day moving average to a monthly chart and a 500-day moving average to a monthly chart. Anyone have any idea of what those represent in years? The 1,000, which is the amber, is roughly 84 years of price history.
That's wild.
The 500 is like 41 and change, 42. Just to provide context over how long and how much time is represented in what you look at on your screen, right? And sometimes we forget on a longer time frame that it's not just the 20 on the monthly. It actually represents a heck of a lot more than that. But no matter what's going on right now, this double top at 84 years of price history is relevant to me. Nobody else may care. That's fine. I don't care. But it's relevant to me. And we have already tagged 5% once. Right here. And for those of you that might remember Joe G or have heard Joe G on Twitter, I know Joe G really well. He used to come into my streams right back when we first started doing them, and he's become a really good trader. And he and I sat in my Telegram and looked at this chart, and both came up with the same number, which was 5. But when did we do that? Back here. Thinking that what it really wants is this level. And it hit it. We didn't say it was going to stay there, but we said it wants to tag it, and that's what it did.
Yeah.
But it didn't, we were looking at the Bitcoin chart and it didn't roll over on the daily. It just went sideways.
Mm-hmm.
Well, this is what the 10-year is doing on the monthly. It's still holding the 20. Yeah, it's chattery. You feel like you could break down every moment at any moment, but it's getting pinched. It's getting tight.
Mm-hmm.
And I really do believe that the 10-year wants this level again. It wants 5%. Everyone's going to tell me I'm wrong, and that's okay. Maybe I am. But the chart's telling me that this thing wants this. It's still a bullish chart.
Yeah.
Right? Now, it's a monthly, so it's going to take a lot of time. It's going to take some time to figure itself out.
Yeah.
But it's still a bullish chart.
To me, it's still bullish because I love the 50 like crazy, right? And it's like it's only broke the 50 once and it hasn't touched it once. And like I was telling you guys, once you start picking this up, you start to become indifferent of which way it's going. And the same thing plays the same effect with the first mouse getting the squeeze and the second one getting the cheese. Even if it tricked everybody on that monthly chart and it came down to that 50, it would probably be the first bounce and then just go up a little bit more and stuff. So it's like a mirror effect. I swear, it's like an infinity sign. Once you get it, it's like whichever way you get your recipe, you can cook it both ways. It'll change a little bit because you naturally feel a little bit different than you do about longs than you do about shorts. But in theory, it's the same principle. It's kind of being applied, and you'll get better and better at it.
Yeah, and you'll learn not to let the retraces scare you as much.
That's one of the biggest things.
Yeah. Understanding what's going on. I bring this daily chart of BNB up for a reason. It gets a nice support, from the 500-day moving average, right? It wicks it and carries on. Then you get a parabolic move, right? Everyone's super excited. I get it. But there's always a retracement. And when you've consolidated and all your averages twist together, as soon as you break out, it's going to fan them out like you see here. Part of the reason I use these colors is so it's easier to see, right? But it fans them out and they become the ranges that you may come back to check. So in that process, though, although it feels dramatic, it doesn't mean the sky's falling, and it doesn't mean that you're going to go to zero or anything like that. Right? Fibs, fractals, filters. If we were to throw some fibs on this chart, just grab the swing low and take it to the swing high. We're 618 right here. Again, just a nickel north of the 50-day moving average. So as time moves on, maybe this 50 hangs out a little closer to 618.
Yeah.
But point is that you break one level, you find the next. So it looks like we're breaking down. The 20 would be a natural place for it to find support, and it would be a first touch. Those will get support and they bounce. So here we are with the choice of 3 again, right? Up, down, or sideways. If we bounce here, what are we going to want to do? We're going to want to take out the previous wave's high. If we fail, like we've talked before, then you want to take out the previous wave's low. Right? And this is how, when someone will look at this chart without looking at any other context to the left and say, you're never going to see price this low again. Someone's going to say that. Right? And then this happens.
Yeah.
But really, is all that happened is you went back to ground zero. Right? You didn't crumble. You just retraced your high. You just don't like to see 100% retracements, that's all. But it's not the sky is falling. And then how do we want to see it on the weekly? Because again, we look at everything as fractal. These impulse candles, they quite often reverse themselves, right? So did it here. It looks like it may want to do it again. What are we going to want to see? It's going to check the 5 and or the T line. If they fail, just start looking down.
I got one for you. I think BNB is bullish right here, but when I get to this part of the stream, I'm like, eventually I want you to bring up CFX, because this is the one that I've been trading, and man, I've been doing really good on this one. I'm actually doing really good on it right now. My chart looks crazy. I'll show it off, but I want to see what you think about it. I'm in a decent little trade right now. It's already started, and I've been doing this on the shorter time frames. I don't want everybody doing this. We're just doing this because Blunt's right here live with me, and I'm looking at it on the. I like the 5 and the 15 together, and yeah, you could look at that. Oh my god!
So this is why, and you and I were talking about this before we actually came on.
Yeah.
So when we talk about those longer term time frames, like the 5 and 1,000 MA, where most people will go, "Oh my god, that's crazy."
Mm-hmm.
You have to remember something because everything's fractal. What they do is they create ranges for you to the up and down side, right? So the fact that you're actually bouncing right off 1,000 days doesn't surprise me. And this, if I was looking at this chart, Rico, which I was not, but this one here is like doubly blessed, right? So you're getting support from a super high long-term time frame, and you get a buy signal. Boom.
Yeah.
Right. So all of that stuff put together is pretty exciting, right?
Mm-hmm.
Support from a long-term time frame. I get a confirmation. You're getting it, all this stuff twisting around together, and you get a nice push.
Yeah.
Look. So, even your fade, right? Impulse up, faded to where?
50.
Right, that you literally struck the
20
the 50 and the 20. Yep.
Yeah.
And the important thing is, and this is where most traders have problems, right? If you're looking at this chart and you see the divergence between these two levels, that's all you need to know to stay in the trade, right? It's confirming for you that the trend is still intact. Now, look, if you wanted to, there's a retracement that took place there. So there's obviously some you could have taken off, but all I'm saying is you want to know where the trend is.
Right.
These are just red candles in an uptrend. That's all they were. They never broke trend. Yeah, they sagged, and your short-term time frame that senses those things picked it up for you, but the trend never broke. What does that tell you? This here was a re-entry opportunity long, or an entry opportunity if you weren't in already.
Right.
That's what that is.
That's when you get a little bit better. I want to say that, Blunt. When you get a little bit, that right there, I feel like that's advanced.
That was the pro tip of the day. Yeah.
that part right there is advanced, because it is something that, like, either, you can add to that position, and you'll learn that too, because when you start to become, optimistic on your winners and pessimistic on your losers, the way that you look at it is way different, and it's very easily to. I've been doing really good, and some of my wins have been really great because of the way that I've changed my my way of thinking, right? Where, you know, I'm gonna be optimistic on my winners that's already proven me to run, and I'm gonna be I'm gonna be so pessimistic on a losing trade that I'm out of it. Like I never met it before, right? And I know there's somebody in this. We got 140 people up in here right now. I know there's somebody in here that's been in this predicament, and this is why I bring it up, because I've been that trader where I'm pessimistic on a green trade for whatever reason. I don't know who taught me this, right? Who was the person that taught me this? And then I'm optimistic on a trade that sucks. And if you've been there, that's why we're doing these things. We're going to be doing them. I'm going to keep doing them as long as Blunt wants to do these on Wednesdays, because a lot of it is just not the candles. A lot of it is the way that you're thinking. And the more you change the way that you're looking at this, the better trader you can become. And there's a version of you that you absolutely love as a trader. I promise you guys that there's a version of you that can knock it out the park.
I took CFX and we went from the 15, okay, and we're going to the 30 minutes. So just like we want to look backwards to see what will become, we also want to look forwards. So what we see between the 15 and the 30 minute was some confluence, right? You know, you saw in the shorter time frame how you got the bounce off what was 1,000. Well, it's not a coincidence that it's the 500 on the 30 minute. Again, it's fractal.
Right.
On the way up, you knew that the 50, because it was the first touch, right, was going to cause you either a complete and total failure or at least some resistance. And that's what it gave you. We know that if we break out, so we break past the 50, we're going to be looking for what?
Previous waist high.
Yes, right. Sir. So I just drew real quick, just the structural level over that area. So the reason why you're looking forward is because you want to start to see where your resistance is going to show up, right? That's why this level's here. Because if you're going to break out, you got to break through this, right? That's why every trade doesn't turn into a runner. This is what you encounter on the way up, right?
Exactly.
So by looking forward, you know, you got the confluence you needed that price was going to move a bit higher, but you also understood where you were going to find a little bit of resistance.
Yep.
Right now, let's look a little bit forward again to see if the 1 hour tells us anything. Not really. And I think we're going to see pretty much the same thing here because it's just one big giant gap now. Right. Okay. Well, if we look at the 4 hour, if we fail this level, well, we know where we're coming back to. We're going to come back to the 20 and the 5 and T line in here. We don't have a confirmed buy signal yet, which means there hasn't been enough momentum to pull the 5 EMA up through the T line.
Right.
Which would be one of the factors that would give us a buy signal. There's some other things working in the background to try and filter the nonsense out. To the upside, you're going to look to the point of control, right? It's just level by level by level. Look what happened with price because you got into this gap. Boom. Yep. That's not an accident that's a big giant green candle.
No, it's not.
Right? If we look at a couple other indicators, so we have a stochastic RSI, something called the Fisher transform, and then a MACD. And these are the things that are kind of helping me or us determine, hey, do we have momentum? Are we overbought? Are we oversold? Is there something going on here where it's going to want to kick price higher? Right? That's what we're looking for. And the stochastic RSI is kind of showing us, I'll just blow this up a little bit, that it was really oversold and it started to show us some divergence and that it wants to move higher. This could easily just kind of take a few steps and roll over again. You got to break through the zero level to make it, you know, a real big run. The Fisher, and I love this thing, it's called the Fisher transform. And it works off, or it creates a Gaussian channel that filters noise. So we talk about noise filters, right? The noise is the stuff that frustrates you. It's the intraday stuff with volatile candles up and down, and that just make you crazy and overthink things, or you get stopped out too frequently, or it's just a mess. This helps you determine the trend. When it's looking like you see it here, the trend is pretty solid down. And it only changes direction very seldomly. Doesn't give you a lot of fake signals like a stochastic RSI might go like chatter, 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 chatter. This does not. Right? It gives you clean signals up and down. This is what it might want to look like to bounce higher. So we're kind of in a process here. In the MACD, real simple. The moving average and signal line are above zero. That's these things. When they're above zero, in my experience, more bullish things happen. Yes, price retraces from those levels, I understand. But it just seems that more bullish things happen when the moving average and signal line are above zero. And more bearish things happen when it's below zero. So ultimately, you want to be able to hold that level, right? If you want to kick price up. If this starts to fit, and look, our Fisher looked like it wanted to kick, didn't it, to the upside? So if that's the case, then Rico, you're going to probably test those highs.
Yeah.
Or another pro tip of the day, where you see the 5 EMA and or the T line. So if you look a lot of my charts, you'll see I have levels drawn across using these areas because quite often they line up price perfectly. And there's probably
where that knuckles form.
Yes.
Got it.
I'll use these levels to connect other levels.
Got it.
If they connect, it usually means you're onto something. And it's probably based off some standard deviations and stuff like that, but they're pretty reliable.
Yeah. Just
from a level by level. Right. So this is why we look forward, right? You want to know where that resistance is. You know, there was our 15-minute. This level that we drew in is proving to be kind of real.
Yeah, 100% real.
And it doesn't mean like we could just, so on this 30-minute chart, and we have 12 minutes left on it, the fact that price hasn't rolled over, I interpret that as bullish, especially because it's trading above the T line and the 5 EMA and everything else for that matter. So that's bullish. Is it a little hot? Yep.
Yeah.
But it doesn't mean that it's hot on this time frame. But when you look at the 4 hour, maybe it's not. Right? And that's where it's a process of the moon and the sun and the stars lining up to give you confluence on all the time frames you're looking at.
Something really quick, Black. You know how you said, and right there, if you can go to the 15-minute candle, that's the one I'm looking at. You know, we got the point of control way up there. But you say, like, you know, when we're trading in the volume profile on the upper side, that's a premium. What would you call it when we're trading right now, where we're at right now in this gray area, as trading is light, but we're coming from the downside to the upside?
Right. So when I call it a premium, maybe that's not quite fair. It's a representation of light trading. So is this, right? Is this a discount?
That's what I want to see. If the upper side was considered the premium and the downside was considered like almost, you know, getting it for a discount compared to where all the actual trading is actually happening at, where, you know, the average price is, you know, a little bit higher where the dark blue is at.
Yeah. I wouldn't say it's a discount. It's light trading.
Got it.
Right?
Got it.
It's just light trading. I don't want to be buying up here. Like, have you looked at a chart for SPX or SPY? Right. Like you look at a weekly and you'll see this is a premium.
Yeah.
Right. Like I don't want to be buying SPY up here.
You can't convince me to.
Right. Like I don't know who is doing. Someone's doing it, but it's not.
I'm not going to.
Right. So this is just wrought with risk for me.
Yeah.
Right. This isn't a daily. This is a weekly chart. So bullish chart, yes. But what have we shown on all the things we looked at today, regardless of time frame? If you're trading above the 20, the 50, and the 200-day moving average, you're on an extremely bullish run that at some point in time is going to want to come back and check those other levels.
Correct.
Like it did it here, right? Launched itself nicely and just got continuations from the 20 the entire time. And then we know what this was. And, you know, since April, we've gone nowhere but up. Still a bullish chart. Like, look at the divergence, right? Like I talk about it all the time. It's all there. You can't deny it. But we also talk about the risk that's associated with running that hot for that long.
Absolutely.
Where will price want to come back? 20 or 50, which are running together. So that's pretty fair. I wonder what this would look like. There's 618.
Yeah, I wouldn't.
541.
I've learned my lesson quite a bit. That's definitely, even though it has all the right attributes, it doesn't take much to get it to roll over, and then you'll see exactly why that was a premium. You'll be like, oh, I get it now.
Yeah, like if you were to say to somebody on Wall Street that you're going to come back to the 20 weekly, they'd have a coronary. Right? That's like 200 some odd points.
Yeah.
And it doesn't seem rational, does it? Listen, the 20 doesn't seem rational at 583.
Right.
So, but we know
I don't
how
want to
this
hear
goes.
that, though.
No,
I don't want to hear that. I've learned that. Yeah,
they don't
I've
want to
learned
hear
that.
it. Just like this, right?
Look how I filled that gap. Jeez.
So this is United Health. It's a weekly chart for United Health. So here's your upper value range. This big failure is undeniable. You all see what that is. But are you trading below on the south side of the 5 EMA? Yes. You're in a downtrend, damn it. Like when I posted this chart, I was in a space a couple weekends ago, and I suggested that this was the level that this thing wanted at $200. And why is that? It's because it's the 1,000-day MA that lines up with this bench of past price from here it is from the past, and all the reasons that I would show you on any other chart.
Yeah.
And the world freaked out. Well, listen, I'm not here to insult your trade or what you own or anything like that. I'm just showing you what price is doing on a chart. I don't give a crap if you don't like it. It's not my problem. That's a you problem. I'm just showing you that you had an opportunity to get out of this thing.
Yep.
That's $600.
Or just short it. That's the thing.
Right? Or just short it, hedge it. Yeah. Like
just
you had an opportunity to get out, and the thing has gone nowhere but down. Now, is this a failed breakout, Rico, that we talk about all the time? Right? Here you are. Yeah. You're trying to come back. A lot of people bought this, right? They bought these 3 red candles. Oh, dump is over. This is the bottom. But look, we know.
Yep.
To the
penny, first time.
Right? Rolls over. Failed breakout. Does what? Takes out the previous wave's low. Boom.
Sheesh.
Right? It's not done yet.
No, it's not.
Right? It's not.
I don't think it's done either.
No.
I think you're going to be able to. That's what we get to do on these streams is because, if we were wrong, they would give us humble pie. So we get to cook humble pie on here and be like, look, because after the humble pie, I noticed that people actually get it together. So I make these humble pies and I'm like, look, here goes right here. Like if you don't have to be mad about the price failing, you just, you can actually just print on it and you won't even care which way it's going.
No. Yeah, this is the weekly chart for oil and it's going to look busy. But this is 1,000 MA weekly, right? So we know that's 40 years of price history. And, you got so much support for so long, but when you fail it, it's a nightmare, right? And I try to tell people, no, we got a problem. We got a problem. Back in here at $95.50, I think it was September of 23, when it's, a blink of an eye away from $100, I'm the guy in the space saying you're going to see 70 before you see 100. Did I sound like I was on coke? Probably. Right. But is all I can do now. The chart didn't look exactly like this at the time, but is all I'm looking for is that this was a top to me. Like, Rico, look at this. Okay. This thing at the top of a bull run, that's a top to me.
Yeah.
And if we came back and tested the 20 and failed it, we would test the 50. And if we failed that, we were going to come all the way back to here. This is when this trend line was drawn right here. It's been there for that long, since April of 24. And it's been incredibly relevant. Here you wick the 200 and run away. This was the Iran-Israel conflict that kind of unfolded and then price pulled back. And now here we are again, taking another run. Now, because I'm indifferent to price, I don't care if it goes up or down. I don't care. I literally have no emotion one way or the other. And when will I become an oil bull? When it proves to me that it can trade above all its resistance, right? Which is right now $80. And I don't mean trade there for a day, because if it trades there for a day and then rolls over and tags 61.66 again, that's not what we want, right?
No.
If I'm, it has to trade above this level for a meaningful amount of time to demonstrate that it's real, right? Like you can have these little breakouts, but they have to stick, right? And what were we looking at for a price target for 61.66? Right back here. There's a bench of past price, runs right through here and created these two skis, for lack of a better explanation. And sometimes when you see those types of things on your chart, pay attention. Price likes to come back and tag them. But how many people will roll their chart back 3 or 4 years to look at it? Not many.
Not many.
That's why nobody will see this kind of stuff.
Not many.
And they don't understand the ebb and flow of, failures and so on and so forth. And that's kind of how we ended up here. So all the people that told you you're on crack, right? Who's on crack now?
What I'm looking forward to is, because it can, when it does turn around, it's like when we get to go back bullish on oil, I think that's going to be a lot of fun, because obviously we're still going to know each other. You're stuck with me, Blunt. I'm going to know you for a while. So I can't wait till, we can finish this downtrend and be like, hey, remember that Blunt wasn't bullish on oil. He was going to give us a signal when it was time for bullishness on oil. And that's the thing, is like when you're indifferent to price, when that flips, you get to get the benefits of that, right? Because you're not emotionally attached to it. You're just going with the ebb and flow, like you say. And that has been some of the most fun that I've been having lately with trading, is not taking it out on myself so much, and really just I'm going with the flow of things, right? I'm following the treasure map. This is not on me. The treasure map is telling me to make a left. Well, I'm making a left. I didn't know if I was going to make a left or a right. I just knew that I was willing to do what had to be done when that time was there. And whether it was going short or whether it was going long, that's where I would position myself.
Yeah. No, here's a monthly oil. There's the 200, there's the 20, and the 50 is what? $80. Just under $80. So that's the level that you got to break out of. So let me tell you this. If you get a green candle at the 50 on the monthly on oil, you're going to take it, because it might look like this, right? You might get a nice big run.
Nice.
But until then, you just got to be patient, right? Everybody wants to buy oil.
Yeah. Have you been looking at silver lately? Silver has come to life quite a bit, and I don't know, maybe my brother's listening. My brother's, he's got an old soul. We all do kind of in the family, but like he's been stuck on commodities. He's not playing around. He's got some XPX, of course, because I'm his brother, and he's got some other cryptos that he holds, but he's really big on his silver and his gold and things like that, and uranium, all that stuff. That's where he's at most of the time.
Yeah, the silver chart has really got a lot of attention, and this is the monthly even. So, this has been, but look, again, everything's fractal, right?
Yeah.
Buying at, major moving averages. And this is your support, right? Continuations. Now, eventually this will get a little hot and it'll come back and retrace. And when it does, it'll behave the same way that everything else we looked at today did.
Absolutely. He said like everything else. Yeah, absolutely. Does the volume profile pop up on there? I don't see it. I'm just curious.
You know what happens? I'll show you. It just gets all shaded, unfortunately. And sometimes you can drop a time frame and it'll come on. Oh, it came on the 12-hour. There we go.
Okay, cool. Just curious on silver what it'll look like. Okay. Seeing that activity. Okay.
Yeah. So here's your upper value range at 35.68, something like that. So you're breaking the 50. So here you broke the 20, came back to the 50, break one level, find the next, you broke it. You're going to look for A, the upper value level, or B, the 200.
Yeah, man, silver is crazy, man. I found a silver mine. I didn't know the price of silver. I was living in Arizona, and I started finding all these mines because there's so much minerals in Arizona. But I had found this like really cool silver mine, and I was so excited. And then I was like, yeah. I got back and I was like, let me go look up the price of silver per ounce. And I was like, yeah, no wonder. I'm the only one there at the silver mine because it would take quite a bit. And silver is a lot harder to clean than other metals.
Oh yeah,
you know,
I didn't know that.
yeah. So, but yeah, it was pretty fun. But silver has come a long way because when that was happening and I was in that silver mine, silver was like 20 something bucks. And I think it's a lot higher than that now. Where's silver at right now?
37.
Yeah, so I think it was like $26 back then or something like that.
Yeah.
So yeah, it's gone a long way.
But and all I've been using on my charts today is just the indicator script that I've written, and it has the ability to give you any kind of moving average that you could want: an EMA, an SMA, a Hull, a weighted, volume weighted. Like there's all kinds, every kind you could ever imagine you can use, which is good for me because I run a T line, and a T line is the 8 EMA, and of course the 5 EMA, but everything else I run is simple. Right now, I have the ability to run 9 moving averages if I wanted to, which I don't run them all. But sometimes I like to know where the 200 EMA is, right? So I just flip it on, and that's it in there. Right.
Yeah, getting to this point right here where man, when we do streams, we really knock it out the park, bro. We're an hour and 30 minutes in. Time flies when we do these, and I love that, because I'm so into it. And it's been working so much, and I know people might be like, man, this stuff's it's not. Just keep locking in with us on these Wednesdays. But how can people get in contact with you to get that indicator? It's the one that I've been using and putting all this crazy wisdom together. It's been really working out for me. But how can they contact you?
Yeah. So thanks, Rick. The easiest way to do it is to connect with me on TradingView at Blunthouse TA. That's how you'll find me, at Blunthouse TA. And it's a private script, so you're not going to be able to find it in your indicators. But if you reach out to me, we'll connect. Tell me you want to try the script, and then I'll just redirect you to my website, which Rico showed, blunthousetA.com, and you subscribe to it from there. And it's $99 a month and pays for itself quite quickly.
Sure will. Sure will. And we've squeezed them on the last stream where you guys are getting the new updated version. I don't even have that one yet, but the new updated version, I'm telling you guys, if you guys are just starting off, just the fact that it lets you use all those separate indicators, you can either pay for TradingView, that's going to charge you an arm and a leg to be able to use more than 3 indicators, or you can just get the Blunthouse indicator and almost sidestep all of that noise and be able to use. How many indicators are all in this updated version?
There's about 9 MAs. So in order to trade my system, I use everything from the T line and the 5 EMA, and then a 20, 50, 100, 200, 500, and 1,000 MA, although I might not have them all lit at the same time. Right. But I use them fractally to help me create ranges. Yeah. There's also the volume profile in here as well.
That's what's amazing.
Yeah. And then you can have all these alerts, right? So you can create alerts when price touches an MA or when there's a certain crossover, all kinds of stuff. Like it's actually like, I'm just using my 5 EMA, right, as an indicator, like as a signal, but you could set anything you want in here to give you a signal. So you can actually have a lot of fun. But I have a system that I use, which is based off the T line and the 5 EMA as a trigger. And then in the background, what you can't see is there's some stochastic RSI and some other things going on in the background to help filter the signals on shorter time frames.
Some stochastic RSI, a little bit of razzle dazzle, a little bit of this, a little bit of that.
This is actually this is that ETH5 thing that I talked to you guys about. I love trading this thing. But the purpose when I wrote this was to get for you to be able to make a safe, profitable entry. Right now, this is a 3-minute chart, so not really fair. But you see this big move down, right? And then the impulse up. Previously, you know, I might give away all this kind of stuff at the beginning, right? Because I'm going to get a signal that's going to tell me that this is safe, right?
Mm-hmm.
But you know what? I've been doing this for 25 years and I'm old now, and I don't always listen to my own stuff. So I wanted to build a little queue that would allow me the opportunity to take advantage of this stuff down here instead of giving it all away, right? I consider this to be insurance, by the way. This is what you pay to make a safe trade here. But like everybody else, I'm always looking for a little bit of an edge. So that's why we went back in and allowed the 5EMA to show us when it's going to change direction a little bit. We might get faked out. We understand that. It's not validated like it is up here, but it is an early entry, right?
Yep.
But again, taking this signal and then taking your money off when you start to see this kind of divergence close, well, this is your money. It's like a money sandwich, right? This is the insurance, or the one half of the bread. This is the other half of the bread, and everything in between is all yours. What happened here? First touch of the 200 and you get a bounce. We'll see if it sticks. We look to the volume profile, can trade in and out of it. You know, we held. If we didn't hold here, you're going to drop down here simply because of that gap. And then you've got all this draw. Right? It's just the ebb and flow. So this is one of those situations, Rico, that we talked before. I think it was the 20, but here's a bounce. This bounce, if it takes off, is going to want to take out this previous wave's high. If it fails, well, different story. It's just price moving between level and level and level to level.
That's all it is.
Yeah.
It's so fractal. It's so fractal. Absolutely. I'm gonna do a quick shill on XPX, man, and definitely want to do this again on Wednesday if you can. And
yep, I'll be here.
Okay, cool. So that I can let everybody know. So if you guys are listening to the stream right now, don't feel bad if you guys missed it. We're going to be doing this next Wednesday as well. We got over 145 people live with us right now. I'm telling you guys right now, this is 146 and it climbs up. And this is what we're here to do. Nobody's paying me and Blunt to do this. We're doing this out the kindness of our hearts. We're giving back to the space, man. Okay. And this is a great way where you guys can get locked in. If you guys can, I'm actually going to share my screen because I want you guys to come over here and, let Blunt do some TA while I'm talking really quick, right? But I want you guys, I'm going to show this again. If you guys are, one of the 146 beautiful souls that are listening in, trying to find a way to, give yourself that competitive edge to, make some more money, maybe, so you don't have to have a part-time job. Your part-time job is trading, or maybe you make this full-time. If you guys can come over here and, like I said, give Blunt House a follow right over here at Blunt420. You guys, that's a sign in the sky. You guys are a bunch of crypto degens. You guys know that we love hashtag 420 and hashtag 69 all day. So there goes a sign in the sky for you guys over here. And if you guys can, we got no likes, no retweets. Come over here and show them some love and actually come over here and engage with some of these posts. Stop chasing the guy that's telling you, scream about this, scream about that. And you're just in an emotional roller coaster on some of these spaces and you're not getting nothing out of it. Like half of the times I see people waste 2-3 weeks, a month, 2 months on emotional roller coasters and spaces and have gotten zero knowledge on how to actually monetize this thing on a regular basis. So if you want to, like myself, work from home and print on your favorite plays and put it into your favorite projects, mine being, of course, XPX, which you guys know is absolutely bullish, launched on Smart DeFi, the best token launchpad out there right now. And we're headed towards all-time high. So get you some of that as well. But this is what I want you guys to do. Like if you guys catch yourself 2-3 weeks out of the time and it's just moon boy this and moon boy that, and you're not getting any substance, I don't want the bull run to pass you up. And then when the bear market crushes everybody, you haven't gotten nothing out of it. So this is a great way for you guys to get something out of it. Also come over here, give me a follow at Rico Moneybags. Super, super important to do these things. Like I said, once again, give Blunt a follow at Blunt420. And I want you guys to tune in next Wednesday, which I'm looking forward to. Let me know in the comments, DM us what you guys want to talk about for the next one. We did some ISOs on the next one. Maybe we'll talk about privacy on the next one. Maybe we go full DJ mode for all you guys know, but you're going to have to come in and tune in next Wednesday. So make sure you guys like, comment, and subscribe. If you guys can't do that, continue to come back and experience the abundance of money with me. Blunt, stay lit for just 1 second after I close this stream. So
You bet.
see you guys later.
WrestleMania 3 at the Silverdome in Pontiac, Michigan. It's a day that I'm certain my guest at this time will not forget. I'm talking about the former Intercontinental Champion of the world, Macho Man Randy
Nothing
Savage.
means nothing.
Nothing.
Nothing means nothing.
Nothing means nothing. What do you mean by that?
More, I'm talking about all the way to the top, yeah. Unjustifiably in a position that I'd rather not be in, but the cream will rise to the top, oh yeah. Macho Madness, yeah, has got more to offer than President Jack Tunney thinks that I got. Yeah, and I'm gonna tell you something right now. Cards stacked against the Macho Man Randy Savage in WrestleMania 3. Yeah, let me say it, yeah. Let me say it out loud. And let me point to the president of the World Wrestling Federation that the Macho Man Randy Savage is not happy with your decision, yeah. I am the cream in the World Wrestling Federation.
Wait a minute, friend.